It's nearly winter, but the bears are not hibernating just yet. They are out playing in the markets, making their presence known. So it's fitting that on today's Stocks in Translation, we are taking a look at short interest. And when we talk about shorting, that just means someone has borrowed a stock from someone who owns it so that they can sell it first, hoping it will decline. And later on, they're going to buy it back, which is also called covering the short. Now, market regulators require bi-monthly reports from brokers that identify shorting activity, and there's a 1 to 2 week delay, but they can still be very useful. And the key statistic to look out for is the short interest. That's the number of shares that investors have borrowed and sold short, and it comes as a percentage of the shares available to trade. Another step that you want to keep track of is the short interest ratio, also called days to cover. Now, we recently sat down with editor-in-chief of Investopedia, Caleb Silver, in an episode of Stocks in Translation, who explained it.
When you look at short interest, you want to look at how many shares are being shorted relative to the overall share count, right? You want to look at what they call the short interest ratio, how many days to cover.
It is a number that tells you how many days it would take, in theory, for all the shorts to buy back and cover their positions. A higher number means a lot of shorts. But on the flip side, it also means there is a higher chance that the shorts get caught in a squeeze. More on that in a minute. For now, let's take a look at the Wi-Fi Interactive here. And I got all of these stocks, by the way, using the Yahoo Finance short screener on our website, also available on our app. And here I decided to only look at the top 20 companies that had at least $100 million in market cap, so nothing too small. One of the stocks Caleb was looking at is Jack in the Box, and we can see that right here. And Caleb had this to say.
So that's a stock that investors have been betting against, which makes me sad because my grandfather used to take me to Jack in the Box when we were running errands around Southern California back in the 70s.
Personal feelings aside, it's worthwhile going over some of the stats on our site. Turns out there are nearly 5 million shares sold short in Jack, and that number is up about 500,000 from the prior month. And to put all this in context, that means over 1/3 of the tradable shares are currently sold short. That translates to nearly 4 days to cover all those shorts based on recent trading volumes. So it's not surprising that Jack is down about 65% this year alone. Now here's Caleb weighing in on the bear case, also the bull case.
If you looked into the fundamentals of Jack in the Box, not great right now either, but the fact that there's so much pessimism around it, it's a good flag for retail investors whenever they're considering buying a single stock.
And as Caleb notes, even if you're a bull, it can really help to get up to speed on the short interest stats, because that can be the fuel for the next leg up, what we call a short squeeze. And here's Caleb one more time, recollecting the GameStop and Reddit surge that we saw in the early pandemic.
Can I bring you back a few years to 2021?
Yeah,
that
the
was the
GameStop
game,
phenomenon.
right? The more the short interest, the more that big institutions and hedge funds were betting against these stocks, the more that retail investors, especially in meme stock land, were squeezing these stocks by buying them and encouraging others to buy them, setting the price higher, and that makes the people that owned it, that were shorting it, have to pay up those shares that they borrowed.
And buy they did, in what would be a recurring theme for years. So here we have a quick recap on how you can use short steps. For the bear case, high short interest can flag trouble. Sometimes you'll even see short interest climb before bad news becomes public, so it's very useful information. And heavy short interest can also signal an end to a rally, but there's no magic formula. Stocks can rally for long periods amid growing short interest, which brings up the bull case here, because all those shorts can be fuel for rallies, and shrinking short interest can help confirm turns, with a delay, of course, of about 1 week or 2. Now, there's always nuance here, but check out the Yahoo Finance short screener and start keeping an eye on how some of the most heavily shorted stocks are performing under different market conditions. And before you know it, you'll start noticing some tradable patterns. And tune in to the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found on Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcasts.